There's a sense in the United States that they are a growing threat. It is inevitable that for the foreseeable future, that China will be a comparable power, let's call it. Stronger in some ways, less strong in other ways, and that it is likely that it will pass the United States. If we have a conflict with China, that has enormous economic implications. It's all a very risky situation. If we're dealing with the external conflict issue, that'll play a role. You're having globally a kind of war. There are 5 kinds of war. There's a trade war, there's a technology war, there's a war for geopolitical influence in different areas, there is a capital war, and there's a military war. So now, because you have a conflict between China and the United States in terms of all the things we know about, you have a technology war going on there. That kind of technology war also means that every country wants self-sufficiency. They don't want to be cut off, because you can be cut off. If you get into an economic war with China, but let me make the point, which is that 22% of all manufactured goods imports come from China. And if you got into a situation where China was like Russia, and we say we don't want to have imports from China and so on, that economic impact would be an enormous impact in terms of inflation and goods and services and so on. You have this isolation and the breaking down of supply chains and the inefficiencies associated with that. So that's basically the functional causes of the inflation rate. And then the central banks have to balance the pains. So stagflation, particularly coming into, I think, 23, money is a medium of exchange or a storehold of wealth. And it's not a good storehold of wealth when the interest rate you're receiving is much less than the inflation rate. So that's what you're seeing happen.
Well, before we get to China, let me pick up on exactly that point. Given what you're saying about the world in terms of inflation and the reduction in the value of the currencies around the world, where is the right storehold of wealth? I mean, is it gold? Is it Bitcoin? Where do you go to defend yourself against inflation?
This is the question of our time. We will, over the next 10 years, certainly, I think, be trying to find the answer of what is the storehold of wealth, because usually it's a money and then a debt instrument in holding that money. But as that goes down, then there is the question of what it is. What is that currency and storehold of wealth? So we're in that place. It's always handy to be the thing that is your buying power. You're going to see it more in inflation hedge assets. So like if you're thinking about a bond, it's better to think about an inflation hedge bond than to think about a TIPS or inflation hedge assets along those lines. And I think that you're going to see then the parts of the economy. So like I think basically, if I was saving, what would I want to save in? I'd like to save in the things I know that I'm going to need. So I would like to save in like my residence, my house. I would like to save, if I could, pay forward my kids' education, pay forward the food or the health care that I can, and so on. I would want to save in those things to buy forward the things I need, most fundamentally. I think if we start to think that way, not only in terms of the investment, but what are even the meat and potatoes type of businesses that are doing that? And then also, I think that you have to think geographically. Where is best in the world? Okay, and I'll say that best in the world are countries in which they're earning more than they're spending and their balance sheets have more assets and liabilities on them, that they're civil with each other and they're not in conflict, and that they're not in risk of an international war. It's basically those fundamentals. And then I would say I want to be clear in making that from my getting to know the leaders, and I don't know Xi, but I know those around them, that they are reasonable people. And there's going to be a change in leadership that we're going to see on Sunday. And you're going to, in my opinion, you're going to bring reasonable people into that. There's a culture, there's that. And then there's a lot of uncertainty and a lot of problems. So let me rattle off the uncertainties and the problems that are temporary, that could be temporary, but they could be longer lasting. The first is they have a debt crisis that, in my opinion, they've allowed to go too far into the bones of the economy. So it's affecting local governments, it's affecting financial institutions. It starts with real estate. Real estate is 25% of their economy approximately, and then the majority of savings. So it has a wealth effect, it has a negative, and it's passing through the system. So that's one. Second is that there's this question of, are they still in favor of free enterprise and the market system, and what does common prosperity mean, and so on. Quite a lot of confusion regarding that. From my operating there, they don't want to mess with that system very much. She doesn't, because when they did some things like shutting down some of the tech companies because they want to break up the minority, these large companies, they also did minority things. Anyway, so let me go number 3, COVID. Okay. Number 4 is demographics. Okay, demographics is particularly important in China because of the culture in China as well as the one-child policy. You know, for the family takes care of the family. And so the tradition is that the children take care of the adults in old age. They don't have a well-developed pension system. And so what happens is with the one-child policy, a husband and wife has 4 parents that they have to take care of. System can't deal with that. And so that's a main thing. It relates to COVID. You know, they have something like 350 million people over 65. So if they don't deal with, so we have COVID. So you have a number of these problems. You have a climate problem and a water problem in China. So China's got a lot of those problems to deal with. But the real question, and we all can have problems. The real question is, where is that beacon? Is that beacon, and we're going to learn more about that based on who's appointed to what jobs and also what statements are made. Is that beacon continuing to do the things that raise productivity and inventiveness and so on? So we're going to learn more. But I think that as far as investing in China, China is the, if you take certain industries, it's main competitor, but it's neither should know, in my opinion, you have to have a certain amount in China. I think the longer term picture in China is still bright because I know the people and I know the culture and I think it's good, but they have major issues